What is up, everybody? Welcome back to another episode of Bitcoin and Markets. How are you doing? Happy Monday out there to everybody. Bitcoin Fundamentals Report Day. We're going to be going over the Bitcoin Fundamentals Report number 304. Let's just jump right into it. I am live streaming on YouTube, Rumble, Twitter, and Telegram. If you're watching over on Twitter, that seems to be where most of the live viewers happen. So if you could jump over to YouTube or Rumble, that would be much appreciated. Subscribe over there. You can also comment. The comments come through very easily from those platforms. Okay, let's share the screen. Get into it. And I'll make this bigger. Big as I can get it. Let's see. A little bigger, maybe. All right. So bitcoinandmarkets.com. This is where you go to subscribe to all my content. I put out a ton of free content. This Bitcoin Fundamentals Report every Monday. Multiple smaller blog posts. I call them Macro Minute or Bitcoin Minute. Those come out at 3 times a week, live stream 3 times a week. Also have the podcast on all the podcast feeds. You guys can check that out. I've been trying to keep that up to date. And I have a premium tier where I go deep into Bitcoin fundamentals, Bitcoin technical analysis, Bitcoin cycles, also macro stuff as well. But right now, the last few, I've been concentrating on Bitcoin short-term analysis because September really has come to be a pivotal month for Bitcoin. And we're going to go through that here on the fundamentals report. We can see that in many different ways. So let's just jump right into it. All right. Quick navigation if you guys want to just jump to the part that you are interested in. Also, if you want to support independent Bitcoin and macro analysis, I think that's been pretty accurate, pretty solid over the last several years. You can check out the member perks and you get half off your first month. All right. Snapshot of Bitcoin. And let's make sure I got all my levels going. Everything is checking out good. All right. So snapshot of Bitcoin. Weekly trend is bottom. A bottom is forming. I should have said bottoming, but a bottom has formed. We're going to look at the live chart here. We're going to look at the price analysis down below. Media sentiment. It's very slow still. Today it picked up a little bit. I was talking about this on the Telegram pregame show. Last couple of weeks have been very slow as Bitcoin has just been slowly dripping down. And now with a turnaround today, there's been a little bit more activity. So we will make sure to go over all the headlines that I think are important for this week. And also the macro headlines as well, because things are starting to get fast and furious here in September. Network traffic is very low. We'll take a look at the hash rate that is hitting all-time highs. Difficulty will likely hit an all-time high tomorrow. And mempool is not all-time low, but a multi-month low, maybe even going on a yearly low. Okay, mining industry, low revenue. They are pushing through, as I said, it's all-time high hash rates and difficulty and stuff, but they have very low revenue. They're really extending out as much as they can right now, just waiting for that price to pump. And the miner reserve has turned positive for the first time in many months, so that's good. Price section, weekly price. At the time of writing, it was 56,514. I saw that it did tick up over 57,000. 58K gang pushed down a little bit on the price, back down to 56.8 or so right now. That is roughly $1,000 on the week, issue to issue, so Monday to Monday. It's kind of a weird time. It's not a weekly candle or anything. It's just Monday to Monday. That is about 1.8%. Now, the week prior to this was 5,000 negative. So you can see we're slowing down, possibly making this bottom. Things are looking good for Bitcoin. There are some bullish fundamentals emerging, and we will cover all those. Market cap still over a trillion, 1.1 trillion. Satoshis per dollar, 1770. One finny, that's 1/10,000th of a Bitcoin, is $5.67. Mining sector. Previous difficulty adjustment was 3%. The next estimated one is looking good at 4.6% tomorrow. Mempool, 122 megabytes. That's very, very low compared to where we have been in previous months. Losing about, I would say, between 5 and 10% a week right now in the mempool. Fees for the next block, 24 cents, super cheap, 3 sats per virtual byte. Low priority fee is also 24 cents. Now, Lightning Network capacity barely down, just less than 1 Bitcoin in capacity, but the channels down 1.4% on the week. 664 public channels were closed on net. So this is the similar story we've been seeing in the Lightning Network. We'll have to see that when price does turn around and break out, we'll have to see if this affects what's going on here in the number of channels, if Lightning Network responds to price like that, because there will be some increased demand for spending. A lot of people will say that there is, deflationary money, people hoard. Well, yes, people hoard, but they also have a subjective value where this level where marginal Bitcoin becomes spendable. So let's say you have $100,000 in Bitcoin and the Bitcoin price goes up. It might unlock a few $1,000s worth of Bitcoin at the top that you're willing to spend. So this Lightning Network might be related to that type of behavior. So we'll have to watch and see how that works out. Okay, let's go into headlines. And I'm going to make this, well, let me check the chat real quick before we do that. Dex Invictus, what's up, man? Here every day. Appreciate you. Okay. So, Bitcoin headlines. Trump pulls ahead in the polls, and this is very bullish for Bitcoin. So I just saw this. This is a New York Times Siena national poll, and you can see the electoral probability is near 100% right now for Trump. We'll see how tomorrow's debate goes, but overall, I think it's going to be a wash tomorrow. The trend now after the initial Harris response bias has washed out. Now we see the kind of the real state of affairs, and hopefully this continues, because Trump has been very, very favorable to Bitcoin. He's coming out saying things almost every campaign stop. He's talking about it, talking about becoming the Bitcoin capital of the world and stuff like that. So as election nears, Trump is looking like this. I think that is going to be very, very bullish for Bitcoin fundamentals. Also, this broke right before, saying that let's see, Bernstein. So this Bernstein has 850 billion assets under management, and they say if Trump is reelected, Bitcoin may breach 90K this year. I think that's very possible. Everything here is likelihood. I think we're not likely to hit 100,000 by the end of the year, but it is very possible. Bitcoin can rally like crazy. I mean, after the ETFs, we rallied 80%. So if we rally 80%, we're over 100K. And that's very easy to do in a matter of weeks for Bitcoin. It's just, when does it happen? All right. FTX to distribute 16 billion in cash to creditors in Q4. This kind of older story came out last week, I think, or really started being talked about last week, and I dropped it in the Telegram last week, so I included it here on this issue. So in the last couple months, we've lived through a German state. So it wasn't the federal government of Germany, it was the state government of Germany dumping 50,000 BTC onto the market, and Mt. Gox Bitcoin distributions, where a small portion likely found their way to exchanges to dump. Now we have some bullish news. FTX cash distributions of 16 billion are coming in Q4. So pretty big numbers here. I say it's not clear how much will be coming into Bitcoin, because people always push back and be like, oh, they're going to buy shit coins with it or whatever. That's possible. That's very possible, because these are shit coiners that had their money there, and mainly large creditors, I believe. I don't know if small guys that had, say, $2,000 in Solana on FTX, if they're actually going to get repaid, or if it is just the big whales. But they are shitcoiners if they're trading on FTX anyway. But there is a possibility, with just the sluggishness of the altcoin sector, that 10% is a very conservative estimation, I think, that will come into Bitcoin from this cash. So that's about 1.6 billion in unilateral buying pressure, or 28,000 BTC at the price, at a 57K price. So that's a big deal. Um, just added to the inflow demand for the ETFs, which have been negative over the last couple of weeks. But I talked about that last week on one of my posts. I think it was a premium one, that I said, look, it's possible that the ETF flows are downstream from price and not upstream. So, for example, if we have a 5% down day, that's going to have outflows from the ETFs. But if we have a 5% up day, that's going to lead to inflows, not the other way around. Inflows do not lead to a 5% rally in price. Okay. Now that I think that is probably the normal state of affairs. It is just very rare circumstance where that is not the case. Specifically, where the flows are they are counter or indirect correlated to the Bitcoin price, and that's only happened a couple times. The very first few weeks of Bitcoin, when the price dipped, but inflows were quite positive. Those first week or two, so that was uh, a separation. And then what happened to price? It rallied. Then there was a period in early July where flows were positive while the price was dipping slightly. And so that also turned into a price rally. So when flows are agreeing with price movements, I think it's price that's leading flows. But when flows are obviously counter to price, I think the flows lead the price. I hope that makes sense to everybody. Okay, Bitcoin. Next headline is Bitcoin has more trading hours than the stock market since 1971. You can see here that since Bitcoin is 24/7, 365, it already has over 123,000 active trading hours since 2010. And that's compared to 100,000 for the stock market trading hours since 1971. And it's going to catch the stock market relatively quickly. The entire history of the United States stock market. So if you go back, or if you go out another 10 years, these active trading hours are going to approach all trading hours for the stock market in just a matter of 20 years of Bitcoin being in existence. Pretty interesting. So, like, I saw on Twitter, I responded to some guy about this, and I was like, he said, "Oh yeah, my dad doesn't like me trading Bitcoin or whatever, and thinks I need to be trading the regular stock market." And I was like, "Just tell him that you have a whole career under your belt now, because look how many active trading hours Bitcoin has versus the regular stock market." Okay. Next headline, CFTC now coming after altcoins. While I do not specifically like that government agencies are going after altcoins, it should be expected. And so that's one of the big pushbacks we get as Bitcoiners when we see the SEC or some other regulatory agency going after altcoins, is like, "Oh, I thought you were crypto anarchists. I thought you didn't like government, blah, 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 blah. But you only like government when they come after Bitcoin's competition." No, that's not what we're saying. We're saying that we don't like it, but you should expect it. Okay. It's expected to happen. That's why there's decentralization in Bitcoin. That's why we get rid of trusted third parties in Bitcoin. This is the exact reason, because we expect it to for them to come after it. These agencies at least have a written mandate at consumer protection. Now, how good they are at that is obviously up for debate, but they're trying to stop scams. And altcoins obviously are scams. So that should be expected. Should be expected, okay? This time, it's not Gensler and the SEC, but the much more friendly CFTC going after Uniswap. And you can see breaking here. Uniswap hit with order by CFTC for illegal trading in digital asset derivatives. All right. Altcoins are just struggling so hard. There's so much cope going on in the altcoins. I see several things on my Twitter timeline, from the ETH community, where they're just like, "Oh, ETH is super, like, in the best position to break out in this bull market." And you just look at their chart, and it's just from the top left to the bottom right. It just looks horrible. So I think those altcoiners that are getting their money back from FTX might be looking at this and being like, well, why don't I just hunker down in Bitcoin and wait? Okay, we'll wait to see when there is opportunity in these scam coins to jump back in and YOLO into these shit coins. And so in the meantime, it comes into Bitcoin. All right, moving on to the macro headlines. Federal Reserve rate cut next week. The Fed will cut rates. The only question is by how much. The market is pricing in a 73% chance of only a 25 basis point cut. However, the Fed usually starts with a 50 basis point cut. So if we look here, back in the dot-com recession, 50 basis point, 50 basis point, 50 basis points, all the way down. Great financial crisis, 50 basis points, followed by, let's see, 1, 2, 25 basis points, and then a big one, like a 1 full percentage point cut. So these two started off with a 50 basis point cut. The only one that's different really is this one here in 2019, but this is way before any sort of official recession. Powell was cutting sympathetically prior in what was termed, I can't remember if he actually termed this as a mid-cycle adjustment. That was a 25 basis point cut. But look at this. This is the 2-year versus the FOMC target range. Look at that. They have a huge space here to cut at least 50 basis points. At least. I mean, that would only take us down to 4.75 to 5%, and the 2 years down here at 3.66 today. So this gap is so big, they could do whatever they want. If they want to cut hard, try to get that soft landing in, they could do that. 25 basis point cut, though, I think is kind of off of the table, even though that's what the market is pricing in. Of course, I thought that there was a higher probability that they would cut last meeting. And in the minutes, we did get a glimpse that there were several members that came into the meeting thinking it might be time to start cutting. They eventually voted against that, but it was more likely than the odds at the time were, leading us to believe. So if we look at this right here, this is the 50 basis point cut probability at 27%. And the 25 basis point cut probability at 73%. I think that should probably be swapped. I think that should probably be swapped because, it's Powell. What's the other guy's name? Waller. They're all signaling that it's time to aggressively try to target unemployment, and that would be, in their mind, cutting rates. So I expect a 50 basis point cut, but it really doesn't matter. The Fed is merely reacting, unable to stop the runaway train that is the coming recession. Their focus will be on managing the panic, and I think they will be mostly successful. So this is kind of a bold statement. They will be focused on managing the panic, and I think they will be mostly successful. I touched on this, I think, on Friday's live stream about how this is different than 2008. In 2008, we had that obvious subprime mortgage stuff. We had banks that were obviously insolvent. Banks are much more solvent today. The Fed has new programs out there that they have tested throughout the years, like back last March, to have different lending facilities that they can take care of this. These banks are supposed to go to the discount window at the Federal Reserve, but they don't because there's a discount window stigma, and it's just like being insolvent. Like if you had to go to the discount window, that means you can't get it in the private sector, in the private shadow banking sector. And so you have to go to the Fed. So that's as good as saying that you're screwed. And so then it just makes people treat you insolvent, makes other banks treat you as insolvent. So the stigma attached to the discount window doesn't really allow it to function very well in this regard, and especially if it's anonymous. I mean, if it's anonymous, then it could be anybody. Like, let's say all of a sudden it's an anonymous discount window, and it's like uh, 100 billion starts getting drawn from the overnight window. The entire system is going to freeze up because they don't want to be trading with people that are insolvent that have to go to the discount window. So anyway, to fix that stigma, the Fed has all of these other facilities that they've started creating. The repo facility, the bank term lending program that they had for last March. So they've come up with a few tricks that they are going to, I think, not super successfully, but they will be mostly successful in managing any sort of coming panic, at least in the foreseeable future. We'll have to see how this develops throughout the rest of the year into Q1 of next year. Because, we started before the banking crisis in March of 2023, we did see those banks start falling. We started seeing the dominoes several months earlier. I think it was like early to mid February that we saw the first, was it Silicon Valley Bank, start to have problems. And so we will see this several months out, most likely. And if we do, then you have to start honing in on those crunch points. Those crunch points are end of Q1 and end of Q3. So if we start seeing some banks having trouble in February again, the rubber is gonna, or the shit's gonna hit the fan at the end of Q3. So that's kind of how I look at those type of crises. And right now, we're not seeing any bank failures, at least big ones that we have to be concerned about. So right now, it looks like they could manage the panic for the next 6 months or so, and we'll have to continue to watch that, of course. But yeah, this is shaping up to this is shaping up to start not as a panic banking crisis, like, say, Lehman Brothers or something like that, but a textbook recession where the economy just slows. People start laying off workers, the unemployment rate goes up, people can't afford as much, they can't afford to continue spending. Then other businesses start having problems, they lay off more people. So that's just a textbook recession. It's not a flash crash of the banks. And so right now, that's what it's building up towards. um, but it still could turn nasty for the banks. So stay tuned. I will make sure to cover all of that. Okay, next headline for macro: US CPI this week. The Cleveland Fed's inflation nowcast has overestimated CPI by roughly 0.1% month over month for the last several months. I covered this back at the beginning of August when we were talking about July CPI. They did not have a very good track record. I think it was 3 months at the time. Now it's 4 months that they have been roughly 0.1% overestimating the month over month CPI. And so currently they're forecasting a 0.18%. You can see down here. So, oh man, I got my months mixed up. So no, it's actually, this should be 0.2% month over month, which is right here. I mean, this would be rounded up to 0.2% anyway. But so yeah, we're waiting for August CPI 0.2%. And if they're off by their regular 0.1, we're still down to 0.1%. So even at that forecasted level, the base effect is setting up for a significant move down in CPI due to replacing August 2023's 0.51%. So you can see in here, August 2023 will fall off. That was 0.5%. If it's replaced by a 0.2%, that's 0.3% off of the year over year number. So we can go from 2.9 to 2.6. So this math was a little bit off because I was using the wrong number up here. But however, if CPI comes in weak again, we could easily see a 0.1% month over month and 2.5% year over year. Well on our way to the 2% target. So the base effect is going to be big this month. We'll see how that works. Because if you look at this, last month in July, this one. Oh, I have to make myself. How do I make this smaller? Because you guys can't see that. Hold on. I'm going to stretch it out. See if this works. Maybe more. No. Can't get that last month. So I have to change my view here so you guys can see that. Yeah, there we go. So you can see last month was roughly the same as July of 2023. So was July of 2024 was slightly lower, but in the same general ballpark. But if we get 0.1% replacing August high, that's going to cause a big dip in the year over year number. And just also look at this. So the overall trend is kind of downward sloping right here, going into recession. So, all right. Let me go back to this one. All right. So, what else do I say? I've expected CPI to be transitory the whole time and stuck to my guns while others mocked it. We are heading into recession and CPI will drop even more in the coming months. We could start seeing more negatives. We had that one negative back there in June. We could see more negatives coming in as we go into recession. And that's going to make the year over year really fall quickly. Transitory the whole time. So people out there that scared you, they were inflationistas. They said we're going to be higher for longer inflation. They did not know what they were talking about. And I guarantee you 99% of them will not question what it was that they got wrong. They'll just continue down the road of using a bad macro thesis. That's the whole transformation that I went through about 5-6 years ago when we were rolling back into recession in 2018 and we didn't have the very high CPI, very high inflation that we all thought was coming because of QE. There was no high inflation from QE. And so I had to go back to the drawing board and question my assumption. Now, these people are not doing that. I guarantee you they didn't do it before. Now they mocked people saying transitory when it was transitory the entire time. And they need to be mocked. they need to be called out. Anyway, okay, let's continue on here. Next headline or interesting chart for the week is the AI race over? Monthly active users on ChatGPT crash. So I did share this on Telegram. You guys can see this number of monthly visits to ChatGPT website falling off a cliff. And this is 0 down here on the bottom. So it's not like deceptive axis where it gets cut off, somewhere. And a big move is not really that big when you zoom out. This is big. Okay. It's crashed from 1.8 million. Is that, no, 1.8 billion monthly visits down to 200 million. So that's a big, big crash. The argument against AI is simple. Its exponential utility comes at an exponential cost. Just when we are facing a demographic cliff that will make profits scarce. So how are they going to meet this exponential cost when we're going into recession, when we're going into a demographic crisis, demographic cliff that's going to really hurt economic activity for the next generation or two? So this exponential utility comes at an exponential cost, which we simply cannot afford. There might be another season of AI investments in the next few years. There might be like a repeat bubble or something like that, but the hype is significantly overblown. Okay, that's all I have for the macro section. Before we go on to price analysis, let me check the comments. Okay, you need this is Deeply Colonial Bitcoiner, aka Sound Maze. What's up? He or she says, you need a spell checker, grammar checker. Well, I do use ChatGPT for spell check and grammar check. Yes. So I do use ChatGPT, but I put out a lot of content. And so that I would say I'm not your typical customer. Um, and, I don't think that the promise, the hype is about a spell checker and a grammar checker. I think it's about running the freaking economy off of AI making decisions for us. And so that is significantly overblown. All right, let me check Telegram and see if there's any comments over here. Point's got one. Point has a good point. On point, as always. So if you were a whale and knew that this FTX cash was coming in, wouldn't you want to front run the potential increase in demand? Absolutely. Absolutely. I'm sure the whales have their market analysts working on this, trying to understand what the impact is going to be. They don't want to front run something a ghost. So I'm sure that they are doing their due diligence, and we shall see. If they do front run, we should start seeing that pretty soon. Pretty soon. All right. So that was from Telegram. Let's continue on with price. We will also take a look at the live price chart here in a second. Okay. I put out these market pros, so you guys can sign up for that. Appreciate everyone that signs up. It's really hardcore technical analysis, in my opinion, hardcore predictions and forecasting of the price near term, medium term, and long term. But right now, what we're doing is we're living through this period that is very critical, I think, in Bitcoin's history, where we have the possibility to invalidate the 4-year cycles right now. If September ends significantly lower, like let's say we do crash down to 44,000 or 42,000, which some people are out there forecasting, the 4-year cycle is over. COVID didn't even break the 4-year cycle. It happened before a halving. We are after a halving. And if we fall that far, everything goes back to the drawing board. Everybody in Bitcoin goes back to the drawing board. Many technical analyst shops, many on-chain metric shops that run like the new Bitcoin Magazine Pro. Okay, they have all of those different metrics. They are all based off of the cycle. And if this cycle gets invalidated here, then everyone has to go back to the drawing board. We're talking billions of dollars in the economy. And the price of Bitcoin will struggle mightily because think about that. Think about you bought Bitcoin based off of this 4-year cycle theory, and now the 4-year cycle is dead. Are you going to hodl? Are you going to? No, you're probably going to pare back some of your allocation to Bitcoin, and that's just going to hurt the price more. So we are at a very, very critical month, in my opinion. We have to end the month where we are right now or higher. If we can do that, I think the 4-year cycle is safe. I think all of the investment theses that people have been talking about for so many years, they're safe. All those businesses that run all the analytics, they're safe. But this is a very, very crucial month. Okay, let's get into the charts. So we finally found some support on the aforementioned 365 and 50-week moving averages, just like the dip on August 5th. So you can see 50-week popped us up here. 50-week also supported the price here as well. This was taken earlier in the day. You can see 56,100 over here on the price. So let's go and take a look at the live chart. If I can pull that up quickly. Hey, we got some movement here. Yeah, baby. 57,100. So a whole 1,000 up from where that was. If we measure out this entire move off of the bottom, we are at almost 9% up from the bottom. So that's good. Okay, let's go back to the report. So the absolute intraday low was much higher this time. So if you go here, this low down here at 49,000, we only got to what, 53,000, I think. So that was a big difference in the lows. However, the close was actually a divergence. So if you don't consider the wicks, only the closes, you can see RSI, there's a higher low on RSI, a lower low, just very marginal on the price candles here. So that is technically a bullish divergence. And we don't see those. I mean, we do see those on the daily, but you can see over the last several months in this whole pattern that we've been in, there's only been one other one, and that was right here. And what happened right after that, we did have a significant move. Um, I should measure that out too. Let's go measure that out. So this was the other div, I believe. Let me bring it up. Okay, so measuring from there up to the top, that's 25%. All right. If we measure from the wick lows, it's almost 30%. It would be if I go to this very top. So if we're talking 30% from this low, that gets us back up to 68,000. Same, almost the exact same here. If we would just replay that today, but that's a easy way to see how we can get back up to those all-time highs. If we measure out how many days that took from this low over to the high with a bear div, by the way, here, 24 days. So 24 days. We don't have 24 days left of September, close, but we could see something like this throughout the rest of September. Okay, let's go back to the report. Share this tab. Okay, so that's the divergence. Price remains squarely within the large megaphone pattern. So this opening wedge here is a well-known pattern in technical analysis and a well-known back testing. So it's something like 71 or 72% of the time, these megaphone patterns break upward. I haven't tested it on Bitcoin specifically. That's like macro, but in TradFi. So we are very squarely within this megaphone pattern. If this turns out to be a bottom and we hold it, that is a sign of strength. So, it's strength when you don't go test the bottom of a pattern, you reverse beforehand. And I remember going back many, many years to watching Tone Vays, and he was talking about this for channels specifically, not for these types of megaphones or anything. But in a channel, when you're stuck in a channel and you bounce before the bottom of the channel, like let's say you bounce on the midline of the channel and then you go higher again, you don't make it all the way to the bottom. That's a sign of strength. You turned around before you have completed the pattern. And so anyway, this would be a similar state here. But if we do a little bit different line and we turn this kind of into a channel, it did get to the bottom of the channel. So take that for what it's worth. I've seen some of these inverse head and shoulders charts floating around today on X specifically. This is a stretch, in my opinion. There is no clearly defined neckline, no head on the daily closes. The RSI is somewhat promising, but you want the first shoulder to have the most extreme RSI tapering off. Notice the left shoulder's RSI came earlier than the bottom in question. All in all, this is not a very well formed head and shoulders pattern. So this RSI I'm talking about over here, the low was set here. If you count that as the low, which is not the actual shoulder itself, but you count that as the low, then the RSI matches up with the head and shoulders. However, there is no well-defined neckline that you could draw to measure anything off of. And if you just take the closes, this one, because the RSI is based off the close. The RSI is not based off of the wick, the intraday movement. It's based off the close only. So head and shoulders would be based off of closes. And if you do that, there's no head and shoulders here. It's just consecutive bottoms, with this being a higher low. Okay. Bitcoin Smart Money Index continues to grow as the fear and greed index is captured by fear. So smart money, you guys can find this on macro, micro. It was free for me to get it. I'm not a member of this website, and they might have something with cookies tracking how many times you visit the website or something, but it was free for me today, so you guys can check that out. I do link to it here, so you can check that out. But you can see this is the quote unquote smart money is continuing to accumulate as price is flat to down. And what do we mean by smart money? Well, this macro, micro, they define Bitcoin futures. Large investors include asset managers and other reportables. Bitcoin futures large investors long positions minus their short positions equals the Bitcoin futures smart money index. So they are stacking the quote unquote smart money, and that would be the asset managers, while the fear and greed index is really over here on very fearful overall in the market. So this is kind of retail and this is kind of institutional. That's how I would roughly break this down. Institutional is very confident. YOLO, retail, not very confident. All right, continuing on. What about Uptember instead of Uptober? September is still shaping up to be a critical month. We are getting some breathing room currently. There is still a lot of work left before we can say we're out of the woods. September's opening price was 58,967 and Q3's opening price was 62,676. Those levels are nearly a given if we can continue up here. I mean, we're getting close to this already for September. Making September into a positive month, that would be very bullish. And we are almost there. We're at 57,100 just a few seconds ago. So we're getting close to that. We already jumped 9% off the bottom, and I think it's 10% now. And those levels are just another 4% or 10% respectively. So very, very quick. I mean, we can do 4%. Obviously, we did 4% in like one day here today. Let's see how much we did today. Share this tab. So today we are at 5.24%. That's a pretty big move. So, one more day like this and we're already September positive, and then 2 more days like this and we are at Q3 positive. So that's very, very possible. I'm still expecting some Uptober energy to creep into September. If that happens, we could easily short squeeze all the way to the all-time high this month. However, I do not think that's the likely outcome right now. It was the likely outcome, I think, before we dipped down here. If you rewind 2 weeks, I think we would have been back at all-time high before the end of September, but we have since come down. So I think this has become less likely to be at all-time high, but it's still very possible. Internal mid-range support and resistance have been sliced through multiple times, meaning price should be able to make an uninterrupted move higher when it does. The possibility of an all-time high by the end of the month is still very much alive, but looking less likely. Let's see what develops because everyone's models might need rewriting after this month. All right, so that's the price section. Let me take a look at the comments if there are any. If you guys are watching on Twitter, jump over to YouTube and Rumble. Links are in my pinned tweet, and you guys can make comments over there. I am live streaming on YouTube, Rumble, Twitter, and Telegram. Let me check and see if Telegram has any other comments. Nothing that I'm seeing. If you guys are on, if you're on Telegram, you can just put the comments in the post for the live stream. Sometimes people put them on the outside. Okay. So nope, nothing over there. Let's continue on. With the mining sector news here, Japan's largest power company, TEPCO, is mining Bitcoin using renewables. You can go to this Bitcoin Magazine article. I link it in the bullet point as well. If there is an article to link, I will link it in the bullet point. That's my format that I use. So, quoting from this article from Bitcoin Magazine, with over 27 million residential and business customers, TEPCO established Agile Energy in 2022. So this is a subsidiary, Ally Energy, and now they are exploring Bitcoin mining powered by surplus renewable energy. The subsidiary has installed mining rigs next to solar farms in Japan's Gunma and Tochigi prefectures. Okay. So it's kind of a misleading headline. It's a subsidiary of the largest power company, and they are just experimenting with renewable energy, which is a good thing. I mean, they're following their incentives. Bitcoin is perfect for this to add some base load to renewable energy build out, right? And so this is just the Bitcoin incentives working as people uh, have been talking about. Okay, next headline for Bitcoin mining. Blockstream Mining issues hash rate backed security token in fundraise. This was a very interesting story. We'll have to see what happens. So, Blockstream, they were the company, or they are the company um, that is behind Bitcoin Core. They are also the company that's behind Liquid, the side chain, which I am very bullish on, or side chains in general, not in particular the Liquid side chain, even though it's a great test bed right now. But yeah, they also have a big mining branch. And so they are trying to raise money by selling a shitcoin. I mean, it seems like a shitcoin, but let's read about it. The BMN2 token is designed to, quote, provide direct exposure to Bitcoin hash rate operated by Blockstream's enterprise grade mining facilities across North America, Blockstream said. Priced at $31,000 per token, each BMN2 represents a 48-month claim on 1 petahash per second of Blockstream's mining hash rate. Okay, so this is not necessarily a shitcoin because, one, it's linked to actual hash rate. It's also obviously a centralized token, and they're not claiming that it's decentralized or that it's, programmable, that there's a thriving community and a thriving need. This is just a interesting way to raise money. Yeah, I would be interesting to see more of the paperwork on this. So hash rate measures the computing power. We know that. In effect, Blockstream is selling 4-year claims on the proceeds from its BTC mining operation in exchange for upfront funding. Investors benefit from a significant discounted hash price of $21.23, Blockstream said. Yeah, very interesting actually, because I can see other miners doing this. So in a bear market, you don't want to sell your Bitcoin. Like let's say you're Marathon and you don't want to sell your Bitcoin. You want to just raise money to allow Bitcoin bull market to get moving, and so you wouldn't have to sell down your reserves. You could just do this. You could issue these tokens that are backed by your hash rate and go from there. Very, very interesting. We'll have to see if this catches on and other people do it. So that is the mining headlines. Let's take a look at hash rate and difficulty. So I've included the daily hash rate line in today's chart. Usually I don't include this very noisy line because it is just noise. I like the 7-day moving average here, but you can see right up here, and you guys can't see that. I have to change my view. There we go. So right up here at the very tippy top, we have all-time high, almost there with this spike up, but you can see that's the all-time high hash rate. The 7-day moving average is as well at an all-time high. And if the difficulty does adjust by 4.6% tomorrow, which is what it's estimated at right now, that will be a new all-time high difficulty as well. So all new all-time highs for hash rate and difficulty despite price dipping over the last little while. And yeah, so there you go. Mempool has been extremely quiet and flat over the last 3 months. Nothing significant to report here. No signs of building uncertainty or worry in the market whatsoever. That being said, it's not building major confidence either. And this is just kind of a repeat of what I said last week because really nothing has changed in the mempool. If you see here, the mempool is pretty flat, pretty dead. There was a little tick down here. Let me see if I can get my cursor out. There was a little tick downward right here in these very cheap transactions getting confirmed. That or they were dropped out of the mempool. But we did have, so this bottom one is 1 or 2 sats per virtual byte. The purple is 3 or 4 sats per virtual byte. And so you can see this was right here. All these cheap transactions got confirmed or disappeared out of the mempool. Very, very interesting. Okay, and layer 2, there was nothing really significant to report there again this week. Also, in case you missed it, here's my latest posts. We got the premium post. We got some macro stuff. This was a fun one to write by Lan. It's Let It Rot in China. It's the movement, kind of like MGTOW here in the United States or Lying Flat in South Korea or Hokomori, I think you say it, in Japan. Another macro minute, I took a look at the yield curves uninverting. Bitcoin Chop is ending here. That was a podcast out and a macro minute on oil prices. So check all of those out if you have not yet. Also did live streams, talked about them on the live streams last week. Okay, let's do one more check of the comments. BTCP says, when we finally squeeze the shorts at all-time high, it will be glorious. Yes, sir, it will be glorious. And let's take a look at that. I did not include that on today's report, but let me find the liquidations. I know it's on a tab somewhere. The heck? Hold on. I might have to make that bigger to find the tab. Okay, here we go. Is this it? I mean, this is this. Hold on. Hold on. Liquidation heat map. Share this. All right. So this is the 24-hour heat map. And you can see that there is a building level down here at 54,000 and one here also at 56,000. Took out some of these levels going higher. But if we take this off or we put this out to like, let's go to 1 month, see what that looks like. Again, this is on coinglass.com. I mean, there's much more activity above the price here on the 1 month. If we zoom out some more, come on, let's go to the 6 month. So these are all liquidation levels. And you can see this bright yellow here, 4 billion at this level, 72,000. Even at 70,000, we're getting 5.6 billion in liquidations. And this is only on Binance. I don't think we can do all. Yeah, we don't have all. Oh, yeah, we do. Symbol right here. Okay, so let's go back out to the 6 month. So yeah, you can see, oh my gosh, 11 billion right here at 70,000. Up here we have 12 billion in liquidations. So this is liquidity. There's kind of two meanings for liquidity. In this case, what we're talking about is the ability to buy a lot or sell a lot without any slippage. And so at 70,000, I mean, there's going to be 9 billion, 12 billion, whatever it was, that you could sell into that and not have any slippage if you're wanting to sell a lot. So this is a lot of liquidity up here because these people are going to be forced to buy. But that is a bunch of liquidity that the market will seek out eventually. If we go to, I think we have to zoom out even further, and we can see how it has really gone after this in the past. These are some good examples, like this one down here, the August 5th low. We had all these liquidations down here that the price went down and snagged all of those and then went back up. There is this level down here at 34,000. I think that's gone. Never going to get back there. Some of this liquidity from around 42,000, 44,000, that is probably never going to get tagged because of this, because this is more magnetic pull, magnetic pull or gravitational pull is pulling the price upwards into these levels instead of downwards into these levels. So there you go. Oh, I was on the wrong screen. Okay, so let's see. Raphael, Bitcoin has no issuer. Shitcoins are centralized, unregistered securities. Of course, the CFTC and SEC will come after them. Exactly. And it's one of those things that, the altcoiners, like, for example, Eric Voorhees, they like to go after Bitcoiners for saying, hey, you guys are unregistered securities. They're going to come after you. And they're like, oh, well, don't you think they shouldn't come after you? Well, yeah, of course. Okay. But we're saying they will. It's just like if I see some kid playing on the edge of a cliff, I'm going to say, don't do that. That's very dangerous. You're going to fall off. And then they're surprised when they fall off the cliff. Okay. The government's going to come after you. That's why we have decentralization in the first damn place. John Delaney, just wanted to drop by and say hi. Oh, what's up, man? Thanks, guys, for hanging out. Let me check Telegram, see if there's any other comments, and then we're going to wrap it up for the day. Appreciate you guys coming out. If you're watching on Twitter, jump over to YouTube and Rumble. Like, comment, subscribe. I appreciate that. Help the channel grow. Reach out to more people that are interested in Bitcoin, interested in this space, interested in non-scammy type of content. I've been around doing similar content since 2016 and with my podcast. And it was, I've never sold a scam to anybody, never hyped an ICO, talked about them being scams the whole time, never sold someone some NFTs or anything like that. So this has been a very user-supported or listener-supported, viewer-supported show for the whole time. And I appreciate all those guys that support me over there on Bitcoin and Markets. You can sign up for $5 support or get the premium content. That's $15 a month. I think it's very much worth it. There's other analysts out there that charge way more, 10 times more, and they're 10 times less accurate than I am. For example, we I don't want to get into that. I don't want to call out names. Okay, so that is going to be it for today, guys. Thank you for joining me. Ansel Lindner, Bitcoin and Markets, bitcoinandmarkets.com. This was the Fundamentals Report number 304. Check it out. Subscribe to the free tier, whatever. Okay. Thanks for hanging out. See you on the next one, guys. Bye.